Hello, friends. Welcome to the second episode of the series, Now We Know. Today, we're going to talk about the oil production cuts announced by OPEC and its possible impact. After the recent meeting held among the world's biggest oil producing group, that is OPEC Plus, on June 4, Saudi Arabia announced that it would cut 1 million barrels of oil a day. Saudi Arabia is the largest producer of oil in the grouping. The kingdom's output will decline to 9 million barrels per day from around 10 million barrels in May. The announcement has come amid concerns over slowing global energy demand. Since low energy demand can likely suppress oil prices, OPEC members resort to supply cuts to balance the demand-supply dynamics and to prevent oil prices from sliding down, as it adversely affects their profits. While other OPEC Plus members did not announce any production cuts in the June meeting, United Arab Emirates and some other large producers extended the timeline of their previously announced cuts to the next year, that is 2024. In recent times, OPEC Plus had earlier jolted the market in October by slashing output by 2 million barrels a day. This OPEC Plus decision drew criticism from many nations around the world, which at that time were requesting that OPEC Plus increase production to help lower energy prices and tame high inflation. Nonetheless, in April 2023, some of the group's largest members cut a further 1.6 million barrels a day. In fact, this time, in the recent OPEC Plus meeting on June 4, it is reported that Saudi Arabia was pushing some members to cut output further, but faced resistance, especially from some African producers, as per reports. This is because many members have not been able to produce as per their allocated production quota. Due to various reasons, primarily the global economic and political uncertainty. Additional cuts would have meant lower revenue for them, which they do not want. Let's now know a little about OPEC and OPEC Plus. OPEC is an Austria-based intergovernmental organization created in 1960 by its 5 founding members, that is Iran, Iraq, Kuwait, Saudi Arabia, and Venezuela. Currently, this organization of petroleum exporting countries has a total of 13 members. OPEC's aim is to manage oil production of its members by setting crude oil production targets, or quotas as they call it, ultimately with the objective of controlling global oil prices. In 2016, mainly in response to dramatically falling oil prices, driven by significant increase in the US shale output, OPEC signed an agreement with 10 other oil-producing countries to create what is known as OPEC Plus. As per US Energy Information Administration, OPEC Plus members control about 71% of crude oil reserves of the world. OPEC Plus produced an estimated 32 million barrels per day of crude oil in 2022, which was 40% of total global oil production that year. We now know that OPEC has considerable impact in global supply of oil. But it is not only supply that affects prices, but also demand. In this context, my friends, I'd like to also touch upon how global oil prices are determined. Economic growth is one of the biggest factors affecting demand for oil, as petroleum products are used as inputs for various economic activities such as transportation, electricity generation, industrial activity concerning chemicals, plastics, fertilizers, and many more. As I have already mentioned, oil producing countries determine the supply of oil. How does this demand and supply dynamics actually work? Crude oil and petroleum product prices are the result of thousands of transactions taking place simultaneously around the world. Usually, these prices are determined by contract arrangements in the oil market. Crude oil is widely traded in what is called the futures market. A futures contract is a contract to buy or sell a specific quantity of a specific commodity at a certain date in the future. For example, if a consumer needs to buy crude oil in the future, the person can be guaranteed of the price that he or she will pay at a future date by buying a futures contract, thereby saving himself from the vagaries of price instability. The supply and demand of futures contract determines the price of oil at a future date. Apart from the above, oil is also sold in what are known as spot transactions, that is, contract for on-the-spot purchase at the current market price. All these transactions simultaneously determine global oil prices. When organizations like OPEC Plus announce production cuts or increases, such announcements send a strong signal in the oil market and create a frenzy among buyers and sellers of oil for securing the preferred price. The resulting trade in contracts affects demand and supply dynamics in the spot markets as well as the futures market. A production cut like the one announced by Saudi Arabia this month usually has the impact of increasing the price of oil in the market. So what is going to be the impact of production cut announced recently? Friends, the prices of Brent crude, a variety of crude that broadly reflects global oil prices, is currently hovering around $1.75 per barrel. This is much lower than the $1.30 per barrel level that was prevailing last summer because of the impact of Russia-Ukraine conflict mainly. Such high price of oil had resulted in high inflationary pressure worldwide. As per some news reports, the aim of the production cut announced in the recent meeting is to push oil prices back in the territory of $80 per barrel. But friends, by now we know oil prices are determined not only by supply, but also by demand. Various international financial institutions have predicted a possible slowdown in global growth. That will result in a slump in overall economic demand, leading to a likely downward trend in oil prices. There is also a possibility that oil prices may rise only in the short term as a result of the price cuts before they start sliding down again. We all will have to wait and see what the invisible hand of the market forces, that is demand and supply, will have in store for oil prices. Thank you for watching the second episode of the series, Now We Know. Stay tuned for many more. Thank you.